Aloha Internet, the Bubbles Stock Market Open Show for Wednesday, October 22nd, 2025, 8:30 a.m. Eastern Standard Time. Let's take a look at some things before the market opens. Of course, this is where the action all begins. The action begins with knowing what your personal financial situation is. You can use this free monthly budget from Gmail. And what I would recommend is today is 10, 22, 25. So we got an extra, what do you call this, sheet here. And that we're just going to be tracking what is in our various accounts. Like this is kind of where we're keeping score, you could say. So like this morning, I already went through for my own personal accounts, and in this first one, I'd like to put the cash value that I have in my main brokerage account. So whatever that is for you, I'd like to put the time. Definitely don't have to put the time, but I like to because I'll end up doing this once in the morning and generally once at night. Sometimes a little more, if needed. And I'll make it bold just to be easy. And then in the second column, put whatever you want, but we're attempting to try to get a pulse on what your own financial situation is. And so let's say that's your brokerage account, then maybe the next one is your main checking account. So you log into there, look, record down whatever whatever you have in your main checking account. And if it feels very uncomfortable, very awkward, then you just have to develop the habit. But this is going to be super, super helpful for people that do develop this habit. This is the beginning of being financially independent and being able to pay all the bills that you need to pay in your life with money from the stock market. You don't have to do that, but if you want to, you can. And this is an easy way. So we have our checking account there, and then maybe you have a credit card. So log into your credit card. And if you don't know, if you say, well, I don't know where to log into my credit card, then you have to figure it out. That is how you become a person that learns. You figure it out and make it happen for yourself. So maybe you got a balance of, let's say, 500 bucks on in your checking account. I mean, sorry, credit card. So there's, there's two general ways that people pay off their credit cards or deal with their credit card payments. One way is that you just make the minimum monthly payment. Your balance is still there, and you're stacking up a certain amount of interest on the part that you didn't pay. That's one way. Another way is to pay them off before the end of the month. So those are the two general ways that people do it. Is they'll pay it off every month, and some people just maintain a balance. And it seems like in general, there's a lot of people that maintain the balance that are hoping someday to pay these credit cards off. What I do myself, and I really started doing this because I was kind of confused on. I would make a payment, and I didn't want to pay any interest. So I had a credit card. At the time, it was the only credit card. I had really ruined my credit X amount of years ago. So in order to rebuild my credit, at the time I got a secured credit card. So I put like $500 down, and the most I could spend on this card would be 500 bucks, right? And because I had poor credit rating at the time, they felt safe because if I didn't pay them back, they got my 500. They got 500 anyways. Like I front loaded the payment of that card, right? So when I first did that X amount of years ago, that was the only credit card I had, and I was kind of confused because I would buy something and then I'm looking to pay it off, and sometimes it hasn't posted yet, and so in order to like make sure that I'm on top of the game, the credit card game, what I started doing is I didn't wait till the end of the month. I waited as soon as something posted that I bought, I would, log into, let's say, this Visa account here, and as soon as something, and I'm checking it, right? I'm checking it. This is zero. It's a zero. So let's say I just bought something a couple days ago. So it looked like this: zero, and then say I bought a $500 item, and then of course the time, and then that's what happened for the second day. And then let's say on, on this day I log in, it's not posted yet, so it's showing zero. But I know that 500 is going to be posted pretty soon, right? I put the time in. This is 8:35 a.m. And then of course at night I'm doing the same thing. I log in, nothing yet, but I know that's coming. I know that's coming. Let's say 39 p.m. Make these bold. You can make them bold, don't make them bold. Whatever, work out whatever type of system that is going to work for you. That's the main thing. Is just like the main thing is make sure you got a system that's working for you. That's it. Don't just blindly copy someone else's system. Make sure you're developing something that's going to give you the result that you want. Because just putting a bunch of numbers on a spreadsheet doesn't really give you the result you want unless they're the right numbers and it's orchestrated the right way. And so even at this time, over here on in this, over on this side, I've got what, $3,000 in there. I know I'm going to make that payment, so I'm already planning. I'm already subtracting this number from this. And as soon as it posts, let's say today it posts, then this morning when I logged in, I pay off that balance, which means I don't buy something if I don't have the cash to do it. So in a way, it's like you might say, well, why don't you just use a debit card? Well, because a debit card doesn't give you a credit line, and also it doesn't give you any sort of rewards or anything like that, and I don't think it helps build your credit. So let's say I log in there today, I make that $500 payment. Now I'm just waiting for that to post. And then, of course, I got to take it out of here. And I'm waiting for this to post. And doing it this way, you start knowing how much money you really have to deal with, including like, okay, where am I at? Like I spent money already. It's going to be paid out of here. And this allows you to keep, once you get down to zero, if you're not down at zero, it's kind of a different story. But once your credit, the amount that you owe to your credit cards is down at zero, this is really quite easy to do. It does take some discipline and some maneuvering around. But again, if you're trying to be a full-time trader, it's not an easy thing. We're not pursuing an easy pursuit here. So what we don't want to do is we never ever want to get discouraged or not achieve our goal because some aspect of the goal is difficult. Of course, of course, it's going to be difficult. The easiest thing to do is not to be financially independent. The easiest thing to do is be financially dependent on some other person or system, organization, whatever it is. So I get it. It's not necessarily the most fun thing to do. I know I've been doing it for years, and even though it's not fun, it works. And ultimately, the end result ends up being so much more fun than the the petty frustration and discomfort of logging into multiple accounts every day and basically kind of doing bookkeeping type of work, accounting work, or whatever it is. I'm not a trained bookkeeper or accountant, so I don't know the proper term to do that we would call this, but I do know that it works. And I also know that I found out by doing it, constantly keeping your credit close to zero, because about once a week the credit bureaus are checking or someone's submitting somehow about once a week it's being updated. And then when the credit recording bureaus see that you have, like, let's say, a $5,000 credit line, but you're only using like 1% of it, and then the next time they check, it's down to zero. When they constantly keep checking and you're using a low percentage of your credit and it's constantly going lower because you're constantly paying it off every week, you're paying it down. It's a fast way to make your credit go up. Like my credit used to be horrible, and now it's basically in the excellent type of category. It's a little weird. Mine is gonna remain personal, but I'll tell you what, it works. I'm happy with my credit. And to some degree, the whole credit thing is a little bit weird. I don't know exactly how it works. I don't put too much stock into it because ultimately cash can do a lot, but credit's good. I repaired my credit. It's good. So this is where we want to start our day at. And then after that, let's take a look at oh, by the way, and over here on the transactions, let's say you notice that there was a um, that you got an email that there's a bill coming due. Like, let's say your whatever electric bill, and you got an email. You see your electric bill is going to be due on 10, let's say on the 25th, 25. So we're just kind of waiting. What is that electric bill going to be? When I lived in Hawaii, my biggest electric bill wasn't that big. I think it was like $60 one time because of some reasons. Some of it, of course, is what I was using, and some of it was it's Hawaiian Electric Company changed their rates, so it went up a bit. But I liked it when it was closer to 20 to $30, a lot more. But it's still pretty low for $60 for living in Hawaii. So Hiko, I don't know what other things are, and that is I put that under utilities, and then I like to have one more over here. Let's put this over here. I'll call this like monthly bills. So now I'm going to do the same thing. First date, let's say if it's always on the 25th, drop it down here. Hiko, how much did I say? $60. So now, and whatever, let's say you rent a place or you have a mortgage or whatever it is, rent, mortgage. And let's say that is $2,000 a month. So now we know that that's there. You got a car payment. My car payment was right in here. It was like right in here. But I paid that car off, so I don't have a car note anymore. And I sold it, so I don't have a. My car payment was $150.95, and my insurance, the last one I had for that car insurance, it was getting taken out around the 30th. And what was that? Well, I forgot what that payment was. I was paying around like $90 a month. So, and then of course we can add these up to know what our total expenses are for the full month, right? We can have that down here. However, again, it's less about it needing to look like this. It just needs to be effective for you and play with it. It doesn't. The only wrong way to do it is it's not working. If it's not giving you the result that you want, then something's wrong. So you could add this up, put the total in there, 2000, 2090. I'm not the greatest mental math person. I guess I should just on video force myself to do this, but it's whatever number, right? All right. Okay, so now we're able to see what we have coming up in the future, and we're able to look at how much money do we have, and we're able to start building a forecast of what we need to generate, right? But at the moment, just get this down. This will take, for some people, it'll take 1 week. For some people, it'll take a quarter, as you might have a lot of things, or you're not used to tracking your expenses. Like me, I'm single. I don't have any children. The most I had is I was renting a place in Hawaii, so I had rent, I had a car note, I had a car payment, I had a phone bill that was here, cell phone. I still have this. At the time when I lived in Hawaii, it was 55, and like there wasn't much. Of course, I got food, but these are monthly bills. These are fixed bills. And then we can add the food in here. So like these are the other thing why I didn't put gas You can put gas, but the reason why I didn't put gas, I didn't put food, because those are controllable. Energy to a certain degree was controllable, but if you want, you can just trust me when I tell you. When I lived in Hawaii, man, I was not really using much energy. Like besides my computer and internet, like the lights on, that was pretty much it. Like I guess the refrigerator, but there's not like I had did quite a bit to already bring my Hiko bill as low as possible. And my car note, when I bought the car, I already did what I could do in the beginning to make this payment 150 bucks. But once I buy that car and I put my down payment down, I selected the car, it's whatever amount. They tell me this is your monthly payment. I say, hey, what if I put another 1,000 down? What if I put another 1,000 down? I was looking for a car payment in this area because I knew like pretty much become no matter what happens, I will be able to make this car payment. It's not too big of a bill for me. And chose a car that wasn't too expensive to insure, drive the speed limit. I have a good driving record, and but these are fixed, right? Like once you have your car insurance, it's not going to vary month to month. But your food bill can vary month to month. You can choose to eat more, you can choose to eat less. Your gas bill can vary month to month. You can choose to drive more, you can choose to drive less. So that's what I did. So then we're working with, we have a solid number to work with. And if you haven't already got good at playing this game, this is what you want to get good at, because we're attempting to play this game in real life right here. That's what we're doing. All right, so enough on that. That's like 16 minutes just in that. But that's where your game should start. And let's look at the market. All right, so as of yesterday, I think that was updated yesterday, the 20 on the 20. Uh, okay, so around 244. Looks like it was updated yesterday. We're still in the high risk. No, wait, where are we at? We are still in high risk. But overall, it's been in high risk for a while. Even over here at the beginning of the year, it got into extreme risk, but it's been going down in risk. How far down is it going to go? I'm not sure. And we see as the time was, whenever the time that this was posted last, so I think it's been recently updated. 10-year Treasury a little bit under 4, coming down a little bit. DXY a little bit under 100. So that's what that's telling us. Schiller PE ratio is still pretty high when we're looking at the median and the mean being around 17 and 16. We're up here at 40. It's giving us an idea that overall the stock market is kind of expensive. And another thing that's given us an idea about that is this Buffett indicator. Buffett indicator, it's it's telling us the stock market is expensive. Doesn't mean it can't go higher. And it doesn't mean that just because it's expensive, it's going to come down. You be careful with that. Like, what if we say the stock market is expensive? What is your initial reaction to that? Are you immediately thinking the stock market's going to come down? Or are you immediately thinking it could still go up higher? Or are you immediately thinking something else? Just be aware of what your instant conclusion is to hearing the information from these two different sources, that the stock market's priced kind of high. And let's move over here to, let's price kind of high. Okay. Let's look at the put to call ratio afterwards, which I'm getting the put to call ratio. I'm getting the Schiller PE and eventually the unemployment rate from this course. Cashflow Academy Armor course. I 100% recommend it. Almost anything from the Cashflow Academy, but this one in particular, yeah, this is good stuff. So took it from there and just did a quick polish on this. Let's look at the put to call. Put to call ratio is, I have it right here. Okay, so I pulled up the same. I looked here to see what the guys over at the Cash Flow Academy, specifically Corey Holiday, had up here, and he has, you see this dollar sign CPCE. And he's basically saying it's normal for it to be a bit below one, but when it starts going extremely below one, then you're seeing complacency. So where is extremely below one and where is complacency? Oh, here's this is pretty low. This is, you kind of see we're looking at 6 months. We'll just change this to we'll leave it at 6 months for now. Don't worry about these moving averages. I'll just take those off real quick. All right. So we're a little bit below one. How much below one? It seems sort of in an average here. So the put to call ratio, and Corey was basically saying when it starts getting extremely low, it's showing you a lot of complacency in the market. And generally, buying hedges and buying insurance is generally cheap down there. Like people, it's an indication when there's no fear in the market. It is it brings us back to what Warren Buffett says: be fearful when others are greedy. And if and then what they're not doing, if it's showing complacency, it doesn't necessarily mean that they're being greedy. Maybe around point 0.62 is that greedy? I don't know. Maybe more up here is showing more greed in the market. So it's something you probably have to play with, not really play with, but become aware of, like experience it day after day, kind of looking at it, trying to get familiar with what's normal, what's not normal, and what value can we extract from uh, these readings. But right now, it looks from my brush up on this, seems normal on the put to call ratio, nothing to be too concerned about. Has the Federal Reserve of St. Louis Fred website. I don't know how they got it. Maybe it's Federal Reserve. I don't know how St. Louis comes into this ED part, but whatever. I don't know if it matters. Still, I don't think this has been updated yet. Man, these guys are lagging. But if unemployment, one reason to look at this is there's more than one way unemployment could affect or can affect, does affect, whatever the right wording is, stock market. One way, it might be obvious to you, if people don't have a job, they're not spending as much money, and then these companies aren't getting as much money. Okay, that one that one's there. The other thing is their 401ks or their retirement accounts or putting money into the stock market from their job. If they don't have a job and they're not contributing to their 401ks and things like that's money that's pretty much automatically every month flowing in, helping keep the stock market open. I'm not suggesting, if it comes across, that I'm suggesting that it was purposely done like that to keep the stock market open. That's not what I'm saying, or to keep the stock market elevated. It's like a manipulation thing. I'm not suggesting that. I'm just saying over time, I don't think it was necessarily these 401ks were put in place to keep the stock market up. I don't think that, but it's happening nonetheless. It's helping money flowing in, buying stuff definitely helps keep prices going up or so. Okay, we're still waiting for that. All right, we looked at a variety of this stuff. Let's just we'll minimize this and close this thing to get out of here and look at what are the actual markets doing. Let's look at the futures market because I think it gives us can paint a very broad picture very quickly for us. Here's our four stock market indices, and right now, what the futures are telling us is that we're kind of we're kind of stalled out. We're besides the Russell, which seems to have more overall movement than S&P 500 or the Nasdaq. S&P and 500 and the Nasdaq, besides the color of the candles, they're looking pretty similar, right? It's just like just trading in this range. We had this big sell off, and now we're back at the top of the range where we had the big sell off, Russell went all the way to the top of it and then came back, and now it's still at the top. It's still kind of right at the top of this big sell-off. So all our indices are at the top of this big sell-off. And if it's not going to go down, it's probably gonna go a little sideways and then up if it's not going down. Because remember, there's only three ways it can go: up, down, or sideways. And right now, you could say from this candle to this candle, it's sideways. But sideways up here in this area, not down here in this area. So that's or in the middle. So that's worth noticing. The dollar, as we looked at on the MMRI, right a little bit under 100 at the moment. And gold still selling off a bit. Same thing with silver. Bitcoin selling off a bit. Oil at the bottom of its range, but having some small green candles here. And the VIX futures spiked up just a little bit. Let's move over to this anything after hours. We got the S&P 500 here, which basically kind of has gone sideways on a 1-day hourly chart. So we're seeing in the black here, this is Tuesday's open market from 9:30 a.m. to 4 p.m. Eastern Standard Time. This was before, and this is Thursday overnight, or Tuesday overnight, leading into Wednesday morning right here. The VIX, it's not going down to 15 too quickly for me here. It's started drifting down here, up a bit since from that. And now I've got one half of a strangle put on there, trying to get the other half. And strike price is at 970 at the moment. And yesterday I was able to get a somewhat of a decent fill. I think if I would have waited a bit longer, I could have got more. Could have got closer to like 300 bucks, possibly. It's hard to tell exactly, as I've mentioned about now, where you got a really big bid ask spread, and so sometimes the mark isn't always what you're getting filled at. And so I'm working with that. Let's look at okay, on this one, Tesla's over here. Tesla, kind of, here's where it closed at, where kind of went sideways. We're sideways compared right now compared to and we where it what closed at yesterday. And you're seeing that in these moving averages. Since these moving averages lag, they do give you a good visualization though of what's been going on. Like you see, the white one is a shorter time frame, and the blue one is a little longer time frame. 20-hour periods here, 9-hour periods here. This one is a little bit faster. It's an exponential. I don't really, not the best person to explain the difference between exponential and a simple moving average. You can look it up though and get a good idea. But the exponential one's going to be a bit faster. So not only is it faster because it's on 9 periods and 9 hours, and it's also the way it's calculated is a little bit faster. So Tesla, let's see, like just looking at this, let's look at Oklo's down, gold down, hood. It's got as low as 129.47 during after hours, about 130 now. SMCI kind of down. How about ASTS down? So at the moment, the markets to me are looking like it's going to be. I wouldn't be surprised if we do not have a big up day today. I wouldn't be surprised if we saw kind of some sideways action, but maybe it was a bit volatile. Maybe it was a bit up, a bit down, but ultimately, I wouldn't be surprised if we got a sideways day. So I'm really not calling it I'm not calling that it's going to be a sideways day, and I'm not calling a down day. I'm just saying I wouldn't be surprised because ultimately, I don't know. I don't know. And I think that is a good thing to realize is that for the most part, nobody really knows. If unless there's some sort of corruption or some sort of manipulation, some sort of insider information, that type of stuff, no one really knows. We're doing our best to try to make profitable decisions with incomplete information. And that is the thing. So when people, I guess, just something to be aware of is when people are talking about the stock market in 100% certainty, unless they're talking about the passage of time, I don't know what else is 100% certain. 7 days to expiration turns to 6 days to expiration, turns to 5 days to expiration, turns to 4 days to expiration, turns to 1 day of expiration, turns to 0 days of expiration, turns to expired. And you can really calculate that because there's 24 hours in a day, there's 60 minutes in an hour, there's 7 days in a week, there's roughly, it's 28 to like 31 days in a month, 365 days in a year, 10 years in a decade. I mean, time is very calculatable. So unless we're talking about the passage of time, if people are saying it's a guaranteed fact that it's going to happen, I think the more accurate way to say is I'm highly certain that it would happen. I highly believe. I don't know. Just be aware if you yourself are coming into some absolute thinking when it comes to your trading and investment decisions, and kind of be wary of other people that are doing that as well. So yesterday, Coca-Cola really went up, so now it's trading around 70 versus it was closer to like the mid 60s previously. Uh, and yeah, so that's what I think. That's where I'm kind of. I would love to see a bit of a pullback in the stock market today, at least a little bit. So Service now drops down a bit, and I can get filled at the price I'm looking for on to complete my short strangle here. We're in the middle of the week, and other than that, Mo dropped down quite a bit yesterday. Really, this really gave a good opportunity to be buying shares or selling puts yesterday. And right now, from this is probably like about a week old, so it's not as accurate anymore, but maybe it's 2 weeks old, not sure. But the last time I dug up the fundamental data on Mo, it was a really good deal ultimately. Like if we think about the Benjamin Graham Intelligent Investor book, and one of the things that he says, I forgot where it was at in there, but he brings up this idea of analyzing a stock on this aspect of looking at it as if you're buying the business, like looking at the whole business, stock analysis through like business acquisition. And under that frame, at the moment, the best deal if we were going to buy a business, and we're looking at ExxonMobil, we're looking at I think this is some sort of Bear Gold or something, FCX, MO, Coca-Cola, the Mag 7. The best deal as far as getting revenues, um, net profit, the best deal is looking like MO. Google's got a profit margin that's okay. Nvidia's got the closest profit margin, it looks like, to MO. We're almost at 60. Nvidia is trying to hit 52, but we're trying on this one, so it's close. But then you look at like the PE. This is showing extended, like a overvalued PE. We got low PE here. Better peg, price to earnings of growth, better on Nvidia. But look at this, enterprise value to EBITDA. Like we want it to be closer to 10. This is this is way off. It's like four times that. This is close to 10. So being on top of the game, like knowing where to find this stuff, which you can find all these numbers here from FinViz, knowing where to find those numbers, knowing what numbers you're looking for, knowing like how to compare them, having a game plan of what you're doing. There's a variety of things, and it happens day by day. You're probably not going to become financially independent with the stock market in your first week. If you did, like you'd have to have a huge bankroll, or you already have a bunch of information on the stock market, a bunch of education of how things work and things like that. So let's say your very first week of trading, very first, not week of trading, but learning. You decide you're going to do this. You maybe know a little bit, but you're really going at it. Your first week, you're probably not going to become financially independent unless you had like $500,000 or so. And you could just buy a bunch of dividend stocks and boom, you're good, or something like that. Money makes up for lack of in the stock market, money, and maybe in life, I'm not sure. Money can make up for lack of education. So let's what I'm suggesting over here at the Bubble Stock Market Show is that you make sure your education is as high as possible because it doesn't really take much money to do that. Look at this. This is free. There's other stuff that's free on the stock market. This is a free YouTube recording. Granted, it's probably not as overall valuable as some free stuff that other people put out, but nonetheless, you got free content all over, all online to be learning. So much information on the stock market that you really should be careful on who you're learning from so you're not getting bad advice, which is why in the past, the Rich Dad Company had this book they put out called Fake Teachers. Was it Fake Teachers, Fake Assets, Fake Money, or something like that? There's a lot of people that not really walking the walk. They're just talking to talk because it's a lot easier to talk than it is to walk. So that's what we're looking at. So again, like for me personally, what I'm looking to do today is see if I can get filled at the price that I want to complete this short strangle. One contract on each side, that's okay. I'm waiting. I have a strangle on Tesla that I've had for a couple weeks already, so that's going to be expiring this week. I'll have a short put on SMCI that's going to be expiring this week, and if it keeps trading in the mid 50s, like there's no problem of me getting a sign. But if it drops down and it drops all the way to my strike price by this Friday of $39, I'm buying. I'm buying. I'm gonna pick up these shares at $39 if I have the opportunity to. And I'm gonna reserve the right to change my mind. But that's what I'm looking at the moment. And so what else? That's that's where we're sitting at for the moment. So if you're relatively new to this stuff, start start at the least exciting place. Start here. This part's never going away. Make sure you understand what's going on. And again, if you're not really sure of what I'm talking about, play this game a few times. See how you get out of the rat race. Look at the financial statement that you're using on this game and try to emulate it here with something like this. You might be a lot better at spreadsheets, and you can put something much better together. But with that, maybe I will come back a little bit later and do a video when the stock market's open. We'll see. But that's our opening. That's might be our only opening video, or maybe there'll be a number two for the opening of trading day Wednesday, October 22nd, 2025.